My name is John Manyeke, Head of Financial Education at Old Mutual. I'm joined by Maya Fisher-French, who needs no introduction. Maya, how are you?
I'm going to hope, John, that today we're going to bring people a little bit of positivity in amongst all of these really scary numbers that have come out of the Old Mutual Savings Investment Monitor. Give people some sort of strategy to get through the next couple of months.
There's one key question that people want to know. And that question is, okay, I've cut everything in my budget. I don't know where else to cut. What else do I do?
If we look at salary increases over the last 5 years, salary increases have actually failed to keep up with inflation across the board. But particularly, funny enough, anybody earning sort of 20,000 Rand or more a year has actually seen a decrease in their real income. So this is not just COVID. People are starting to really struggle to come out on their budgets. And I think we're going to have to think differently about this kind of I earn my salary from my employer and that's the only income I have. We're really going to have to start thinking about the side gig, the side hustle, having other businesses. And if anything, the lockdown and COVID has actually shown us people with the most incredible resilience.
But apart from supplementing income, what else do you think people should do, especially in having to review their short-term insurance or even their life cover?
You go and find out if you're not driving your car every day, if you're working from home, could you perhaps speak to your short-term insurer and see if there's a discount that you can get on your short-term insurance. Another one, for example, even on car, I wouldn't say this would be my first choice, but at least say you've got fully comprehensive and your car is not financed. If your car is financed, you have to have fully comprehensive insurance. And you're really struggling, at least make sure you have third-party insurance so that if your car's stolen or if you crash into somebody, at least you're covering their bills. So I think you can look at perhaps reducing cover but still having cover. And the same applies to life cover, John. If you perhaps, we all want to have the best life cover possible for our children, our families, but if you're really struggling to meet it, don't cancel it. I think that's the main story. Don't just let those debit orders bounce. Chat to your service provider. See if you could perhaps put pause on the cover or reduce the cover for a period of time. I know the insurers are saying, look, if you want to cut the cover, maybe lower the cover for a period of time, we can always put it back without further underwriting.
Well, of course, for some, there's a challenge of having adult dependents and also having to look after their own children. So how do you start that conversation with family, to say, look, things have changed. I can no longer do the things that I used to do. How do you manage that?
It's going to have to fit into your budget. So I always think it's important that you acknowledge family commitments and that you budget for them. Often what we find is that people are treated like ATMs. It's just when the family comes and asks, they give money. Instead say, okay, this is a commitment I have to my family. This is how much I can put in my budget realistically to support them, and have that conversation so they also know what they can expect of you. You
are the person who started the storm around this credit life insurance. Of course, that was great for a lot of consumers out there, because a lot of people didn't know that they even had a credit life insurance.
Credit insurance is exactly that. It's an insurance on your credit. And it applies usually to things like credit cards, personal loans. Most store cards have it in the form of what they call balance protection. It's very important to go pull out those statements. If you're worried about losing your job, spend the time now going through all your policies, all of your banks, your credit statements, and finding out if you have any cover that protects you if you're retrenched. So credit insurance, for example, if you have it in place, will pay out if you're retrenched between 6 to 12 months of your credit installments.
Is there still hope for emergency funds? Is it still realistic in this day and age?
I'm a slightly controversial, perhaps. I think, John, you agree with me. I would say I had debts to repay right now. Of course, I'd be paying my minimum installments because that's an obligation that I have with my credit provider. But right now, rather than accelerating those debts, I'd be wanting to build up my emergency fund to make sure that when I have some event, I'm not having to take on more credit for it. So absolutely, an emergency fund is absolutely vital right now, and start trying to really build towards that. Try and keep as much liquidity available as possible, especially if you are worried about job losses.
Anyway, I think that's all we have for today. Thank you, Maya. And I think that was a great conversation. I hope people would have picked up a couple of lessons here and there, and hopefully people will apply and take a few tips here and there. Thank you so much.